big drop in the market and a bounce back from the lows today. In today's video, we're going to be talking about what the next steps are for the market, how much further we have to go down, what the catalysts are for the upside. We're going to be taking a look at the SP 500, the NASDAQ, the Russell, the VIX, and the large tech stocks. So I hope this video finds you well. Without further ado, let's get started with the video. Okay, nice and simple. We've got Nvidia earnings tomorrow after the close. Obviously, that's going to be a very, very big deal. After a couple of weeks ago when DeepSeek was released, Nvidia dropped 17% because China basically said, hey guys, we just created a $6 million version of ChatGPT where you guys spent tens of billions of dollars for ChatGPT. We only spent $6 million. So Nvidia took a huge hit because if creating a program or a company like ChatGPT is actually much cheaper than it actually is, then Nvidia, the chips of Nvidia, are also going to be much cheaper because Nvidia powers a lot of these AI tools. So if DeepSeek is actually much, much cheaper than ChatGPT, all of the valuations for these chip companies are also going to be much lower. So tomorrow is going to be a very, very big deal. It's going to be very, very interesting, actually. With big deals, and with that being said, of course, we also know that into the end of February, according to the S&P 500 seasonality, is that the market overall is bearish. So far, I mean, the market is bearish. So we're going to have to see what the next steps are for the market. But there's a few interesting things that I really want to show you guys. The market is at a very interesting level of support. We're seeing a lot of vomiting price action in these large tech stocks. We might see a bit of a bounce. I'm going to show you guys why. It might not be clean, but, you know, this is my thought process. So, number one, we are at very, very important trendline support on the SPX. This is a daily chart of the SPX. As you can see, this trend line has acted very, very well over the past few months. And we're literally at the trend line right now. So I haven't seen really anyone share this on social media or anything. So it's interesting. And I really just wanted to show you guys we're at major trend line support now. Yes, we had a big drop to the downside. The market generally gets maybe a bit more choppy here, but we should maybe get a bit of a bounce. So not only is this true and prevalent on the SPX, but it's also prevalent on the NDX, which is the NASDAQ. So we are at also a bit of trendline support on the NASDAQ as well. We closed a bit below it, but the point is that this is going to be a really interesting level that we could watch for in the future. If we do get a bounce and it falls lower, then we could be short essentially with a stop loss at this trend line. So, you know, we could be using this in the future, and you could also see that it's caused breakdowns to the downside. And then, of course, as we broke lower, it also caused bounces. So thankfully now it's showing up on my screen, but you know, we had a breakdown lower. Once we reclaimed it, it acted as support. Once we reclaimed it, it acted as support over here as well. And yeah, you know, so we're basically essentially at that same level here right now. So we're gonna have to see how that responds. But the main thing now is that it's cool. The SPX and the NDX are both at trendline levels of support. What are the next steps? And the only way to see the next steps, I'm not going to lie, it still does look a bit bearish, but in the short term, we might get a bit of a bounce. I'm not completely sold on that bounce, though. Just purely based off of price action of these large tech stocks and everything like that, it does make sense for a bit more of a downward move, but we're going to take a look because we're going to take a look at a few different things because the VIX is still showing a bit more room to the upside, and the large tech stocks are still showing a bit more room to the downside. So we're going to have to see. Just real quick before I go into all of those things, So this is the SPY, right? As you can see, this is great. Yesterday I was basically showing how we would have major support at 591, 592, right, on the SPY. I was also showing how we would have major support literally at 510, 511 on the NASDAQ. Both of those levels held, and from those levels, we bounced very aggressively. Is this an automatic bullish setup, though, right now? Absolutely not. This is not a bullish setup on the market at all. And that is currently the issue because, yes, we did get a bounce off of the lows. Yes, if you even look at this on a 1 minute time frame, great. The market did get a bounce from the lows. Okay, spectacular. But is this on a larger time frame? Is this still something that you want to be extremely bullish on? No, because this is this is a bear flag. So what needs to happen is we need to really comfortably break back above 598, 597.50. If we can do that, then sure, maybe we'll be able to reclaim 600 and 603. But generally what goes on for seasonality wise into the end of February is the market is bearish. So we're going to have to see. Regardless, it does, the market gives chances to make money regardless. So it's going to be fun to see how much more room we have to the upside to give a better shorting opportunity, or what really the next steps for the market would be. And that is currently the situation when you're looking at the SPY, the NASDAQ, right? But the IWM is showing a much more interesting picture. So if we look at the IWM on a daily time frame, the IWM is actually very far overextended to the downside, and it is currently trading outside of the lower level of the Bollinger Band as well. So we have multiple opens and closes outside of the lower level of the Bollinger Band on the IWM here. And generally, what tends to happen? We did get an instance prior back in December where we had multiple opens and closes outside of the lower bands. We didn't get that much of a bounce, right? But then we ended up getting another leg lower. This was the real bottom, and then we got a much bigger bounce afterward. The same can occur. Here. We could get a small bounce, maybe to about 220, 219, 220. That would be normal. It's completely normal if we do. From here, similarly, we could get a bit of a choppy price action, a bit lower. Similar situation to what happened back in December into early January. And then from here, after the middle of March, right? That's when things can start getting a bit more bullish. So that's currently what might end up happening with the IWM. And just purely based off of the IWM being this overextended to the downside right now, it gives more chance and a bigger probability that the overall market is also going to end up bouncing. Because if the IWM is this far overextended to the downside, right? The IWM influences the price action of the S&P 500. So if the IWM algorithmically wants to return back into the Bollinger Bands, and algorithmically it wants to bounce, the S&P 500 is also going to algorithmically want to bounce. Okay, so how much that bounce is going to be, that is yet to be determined. I wouldn't be surprised to see futures green overnight. But overall, if the IWM does gap down lower, it would be a pretty solid opportunity to get into some longs for probably even June, July. Getting into some longs for that, I think, would end up being pretty decent on the IWM if we end up gapping down lower and if we open outside of the lower level of the Bollinger Band again. That would be pretty interesting. So now one of the main things that we have to look at is the VIX. All right, so the VIX really was very interesting today. So as we saw the VIX, before I go into it, the VIX, we need to monitor because it has an inverse relationship to the market, okay? If the VIX is rising, that is very bearish for the overall market. And the indicator that we have right now on the chart is the Bollinger Band. When we are trading outside of the upper level of the Bollinger Band or the lower level of the Bollinger Band, price tends to want to return back inside of it algorithmically. So what we saw today was the VIX spiked aggressively. When the SPY dropped down to 590 today, 589, etc., the VIX spiked aggressively. So we were very far overextended to the upside on the VIX. Because the VIX was this overextended, and because the S&P 500 was, and because the S&P 500 was so overextended to the downside, it gave a really good opportunity for the overall market to bounce as a whole. Give me a second while I change the battery. Okay, so VIX inverse relationship to the market. Spectacular. The main thing right now is that the VIX is not really that overextended on the close, which is still a bit dangerous for downside to the market. Because if the VIX can continue hugging the upper level of the Bollinger Band, and if the upper level of the Bollinger Band continues to rise like this, and the VIX continues to hug it and continue rising over and over and over, right? That means that the VIX is not completely overshooting to the upside. If the VIX overshoots to the upside, like we saw today, that is a bigger opportunity for the market to bounce, because it's a bigger opportunity for the VIX to drop down into the Bollinger Band. But if the VIX continues to just hug, go higher, 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 nice, cute, right? That's very bearish for the market. What you want to see is big volatility, big spikes in volatility to get a big chance of a bounce in the overall market. If the VIX continues to do this, not spectacular for the overall market. And that's currently what the setup is showing. So this is not a completely great bullish setup personally on the VIX from what we can see. We did get an open and a close outside of the upper bands, which is great. We might get a pullback to the downside on the VIX purely based off of just being outside of the upper bands, which is good, right? So the overall market, once again, if the IWM bounces, we could get a bit of a bounce on the S&P 500. Futures could be green. The VIX could be red. We could get a bit of a pullback down to 1850. But then, based off of just how the VIX is set up, 1850 is going to be a major support. If we hold that, then this is going to make another leg to the upside. The VIX is going to end up making another leg to the upside, and the S&P 500 and the overall market is going to make another leg to the downside. So I hope this sort of makes sense. And now, we get a much bigger and a better, clearer picture when we look at the large tech stocks. So we could just start off with Tesla. So Tesla is really starting to break down much lower now. And it has the only real major support is back down to 275, 280 area. We're at 300, which is a good psychological level of support. And of course, you always want to be buying dips on Tesla and extreme weakness on Tesla, especially because it's very, very manipulated. So this is the thing. It's just the market is giving mixed signals right now. I would much rather go short. So I would, if I was short right now, right? Obviously, the target to the downside is going to be around 275, 285 area, right? This zone, right? Once we get down here, it could happen in a day. It could happen in another week. Once we get down here, the long opportunities become much better. So, just based off of what we're seeing on Tesla, there's a bit more room to the downside. Microsoft, what we're seeing based off of Microsoft as well, there's also a bit more room to the downside. It has support at the low 390s, right? So we're at 398. It has a bit more room to 390. So we're still not even overextended to the downside in terms of the Bollinger Band. At least on Tesla, we're trading outside of the lower bands, right? But on Microsoft, the bands are falling lower as well. So it would take a lot. It would take a huge red candle for us to even be trading outside of the lower bands, which is Very bearish. Does that make sense? So Microsoft doesn't look great. Would I want to be a short? Would I want to newly enter shorts down here? Definitely not. I would not want to newly enter shorts on Microsoft down here. I would rather wait for a bounce to around 406, 407. Or if we don't get the short, then it is what it is. I wouldn't want to chase. So Google, similar concept to Microsoft, except Google has a lot more support at around 175. You can see it's been holding. It's been a very, very major prior level of support as well, this 175 area. And, you know, similar concept. If this continues moving lower, if Tesla continues moving lower a bit, there's a bit more room to go. But then once you get here, the market becomes a better opportunity to long, in my opinion. But it's gonna really depend on especially Google and Microsoft and large tech stocks as a whole, man. It's gonna really depend on Nvidia's earnings. But if Nvidia didn't have earnings, this is just purely the way that I would be doing the analysis on it. Here's the other thing. Amazon wicked to the upside, had a really big rally off of the lows. Amazon was trading very far outside of the lower level of the Bollinger Bands, and we got a big bounce, and you know, it's trading out, open and close outside of the lower bands. So like I said, like with the Bollinger Bands, price wants to return back into the mean, which is why we saw this big price action, big bounce out of Amazon. And we're going to see if Amazon can help pull the market up, if it has room to go to 216, 217. What's interesting is Apple was also just continuing to make new highs. Regardless of how weak the overall market was, Apple wicked into a new high today. It still closed above yesterday's close, which is, or right at yesterday's close. So not necessarily the most bearish thing, actually, on Apple as well. Apple's doing well. Netflix and Meta, though, not so much. But, you know, how much has... This is a daily chart of Netflix. Netflix dropped down already 10% today. 10% from the highs. Does it have more room to go? Yeah, sure. But we came back and retested the gap pretty perfectly down to 950 support. So it held 950 and bounced back up to 977. So clearly, Netflix has a bit of support down here. Meta also has a bit of support down at 637, which is almost exactly where we ended up bouncing on Meta. It's bounced at 642, has major support at 637. So how much from the highs? Dropped about 13% from the highs. Do all of these stocks look like they could get a bit of a small bounce and then another leg lower? Absolutely. Would I want to be short on any of these stocks down here after we've already made new lows and things are already starting to look weak? Not really. You could, but it would need to be very tight. That's the thing. If you did want to short here, the momentum is clearly bearish. Seasonality is bearish. Price action is most likely also going to remain bearish. Bitcoin, crypto is also bearish. If you did want to swing short, you would need to have a tight stop loss for these positions. And that's truly going to be a big tell in the overall market right now. And I really want to see if that's going to end up occurring. I mean, Nvidia, we're not even getting an earnings run-up out of Nvidia. Nvidia is not even painting a bullish picture. But regardless, you know, anything can really happen with Nvidia. And then AMD, we're getting a bit of a sell-off out of AMD, similar to Tesla. We're trading outside of the lower bands as well. Based off of everything that we're seeing, the large tech stocks have a bit more room to go to the downside. The VIX has a bit more room to go to the upside. And then Nvidia earnings is going to really cause some bull crap in the overall market. So seasonality-wise, into the end of February, the market should be bearish. Let's see what ends up happening. If you do want to swing short, you need to have a tight stop loss at levels of resistance, because if we do end up bouncing it could be a very, very aggressive bounce. And just purely based off of the trend lines that we have on the SPX, if it does want to show, based on the SPX and based off of the NDX, we are at levels of support. If we do end up bouncing off of this, it could be a very big bear trap. Let's see what ends up happening. Are we going to bounce back to 21,500 on the NASDAQ? Or are we going to bounce back to 6,000 or 6,010 on the SPX? Time will tell. But for now, things do look a bit more bearish. But in the short term, the IWM could get a bit of a bounce. The overall large tech stocks can get a bit of a baby bounce. The S&P 500 can also get a bit of a bounce overall. You know, we might get a bit of a bounce tomorrow. Earnings run up. Tomorrow might be bullish, basically, is what I'm saying. Let's see. Okay, let's see. But I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning in the Discord. Keep pushing forward. Keep persevering. Do not accept failure. Do not accept losses. You have to continue pushing. You have to show persistence. You have to show patience. You have to show endurance and stamina with this market. Do not just accept the fact, oh my God, I just lost. Oh, I just had failures in the market. Keep pushing forward. Failures and losses are learning lessons. This game, you will lose trades. You will lose money. But victory goes to the person who keeps on getting up and learns from their mistakes. If you were told, hey, you are 30 failures away from hitting it big, how excited would you be to fail? You would be very excited. So you need to change your perspective about this entire concept with trading here. You're going to lose. But if you can lose and learn from your mistakes, that is the game and that is the goal. So I hope you guys enjoy. I hope this made sense. Do all that good stuff. Like, comment, subscribe. I'll see you guys tomorrow. Have a good one.